So you say that you feel that the markets will reward companies that have a significant margin of safety. What names do you like?
So in that sense, I like companies with, that have a growth area in front of them right now and that can increase margins as well. So for example, J&J. J&J is trading at 16 times earnings. 60% of its earnings come from the pharma group, 30% from medtech, and they're spitting out their consumer good part. So if you look at their company after they spin it out, it has a higher growth than the S&P. It has a AAA balance sheet, 2.5% dividend yield, and really growth coming forward with a margin of safety that we feel, given where we are in the cycle, given where the Fed is, given where inflation is, these are good things to have for a company that can protect yourself on the downside.
And apparently a lot of analysts also feel that way. No sells on J&J in the analyst community, about split half and half between buy and holds. Sarat, what's your time horizon? How long do you think value sort of stays in favor?
I think value is going to be here for a little bit. We've had 10 years of growth where the S&P has grown 16% a year, and most of that has been driven by really growth stocks that have PEs way higher than the 21 on the S&P. So we're looking to kind of have a value bent on our portfolio. Yeah, I want growth with reasonable price, but I also want growth that the market's underappreciating. And you look like a J&J that trades at 20% discount to the market. So I think there are plenty of these opportunities abound. We've just had an area where the index has been really taken over by some mega cap growth stocks.
And let's speak about another specific stock. You say you like Budweiser, an area that also is seeing some growth.
So here's a true value stock. This is a company that was broken. It's a combination of many mergers. It's got a huge debt on top of it, new management. And really what's happening here is management is committed to growing kind of their key products. I mean, they have 8 of the 10 top beers in the world. 60% of their earnings come from emerging markets. And they're trading at 18 times earnings, but 18 times might sound high, but it's very depressed earnings. And once consumers come back to restaurants and on-premise takes over, not just here in the US, but globally, this company has a huge runway ahead of it. And I think people are looking to premiumization of alcohol. You look at Constellation Brands that has done really well, Diageo. This is a value play in an area that we see secular growth that has plenty of self-help opportunity.
What about concerns, Sarat? Any concerns about rates rising too quickly next year?
So I think that's one of the reasons when we're looking for companies that have margins for safety. If rates do rise, you've got a couple of things going on. Firstly, the companies that have discounted cash flow, that have more cash flow in the future, you will just see a rotation out of them. Secondly, money will go into fixed income. So you want to make sure you have fixed income substitutions in the equity market that people will not take money out of. So J&J, Budweiser are good companies with dividends that are growing. And I think you want to be diversified for protection, not just for rising interest rates, but also because you want companies that have their own tailwind behind them.